I'm John Loos, property economist at FNB Home Loans. I work in Joburg, it's Fairland's FNB head office. I think before one starts with the outlook for 2015, one just has to quickly mention where we are right at the moment. The residential property market at present is, I would say, a very well-balanced market. By all reports, our average time on the market is under 3 months now, according to the FNB Estate Agent Survey. So it's come down from, at one stage, up above 5 months. So houses are turning faster. And if one looks at house price growth, ticking along at 5.9% year on year, which is not shooting the lights out, but it's just in line with CPI inflation. So no real increase or decline. And that speaks to that notion of a very well-balanced supply-demand situation. With some agents, I must add, in certain areas, citing shortages of supply now. The economy is showing signs of some moderate improvement. We had that contraction in the GDP in the first quarter of the year, and since then it's gradually just started to show signs of stronger growth. And we anticipate that after a GDP growth rate this year of around about 1.5%, that will go to just above 2% next year. Certainly no fireworks. If one looks at the interest rate situation and inflation for that matter, CPI inflation is back in the target range. So also no real fireworks on the interest rate front. We just believe that the Reserve Bank will carry on with its very gradual process of normalizing interest rates, and that means up a little bit. So we're penciling in another 0.75 percentage point worth of hiking during the course of next year. That certainly doesn't seem like it's going to break the residential property market. So what we anticipate for next year is another year of possibly slightly stronger house price growth, 6 to 7%. But what we are seeing signs of, and I think the highlight during the course of next year on the residential property market is going to be in the residential building sector. We've got our FNB BR Building Confidence Index, and that has for about a year now shown steady uptick in confidence amongst the building contractors in the residential space. Building plans passed in the third quarter started to grow noticeably. So we're projecting, after some flattish years in building completions, we're projecting quite a strong growth rate during the course of next year, in excess of 20%. So that's where the excitement is, or we expect it to be. What this could do is just start to alleviate these mounting supply constraints that have been reported in the residential market. And that could mean going out into 2016 and 17, you could have far better supply, less supply constraints, and therefore slower house price growth in those outer years. But for the time being, it's all a very well-balanced situation, and certainly in the near term looks to stay that way through 2015.